Internal Revenue Service IRS tax news. Using the tax withholding estimator will help taxpayers avoid surprises next year. COVID tax tip 2020-101, August 12, 2020. Using the IRS Tax Withholding Estimator, there's a link to that tool here. There'll be a link to this in the description. Can help taxpayers have the right amount of tax withheld and avoid surprises when filing next year. So this is actually a really nice tool that the IRS does provide here. So let me just recap the objective of the tax return. Note that when you file the tax return, and we're talking about the 2020 tax return, you're going to be filing in 2021. The ideal situation of the tax return would be that when you file the tax return, it would be an informational return in which you would receive no refund and you would have no tax due. Ideally, it would just be an informational type of return. In reality, that is impossible because the tax code is too complex to be able to do that. So what we end up doing then during the years, we try to overshoot a little bit so that we're going to avoid having penalties. That's the main reason to overshoot, not so we get a big refund at the tax time, because we would like to hold on to our money sooner. So what we do is we overshoot a little bit to expect a small refund to avoid penalties and interest for underpayment. And then when we file in 2021, we're hoping to get some small refund to avoid interest and penalties if we were to undershoot, because the IRS wants to get paid during the year. And if we don't pay them during the year of 2020, even though we don't really know what we owe them because the code's too complex to figure that out, then they'll charge us penalties and interest. So we try to overshoot that. So so now they have this estimator. What if you think you have changes in this year or something like that, or your tax return has changed from this year to last year, or if you owed money, if you just filed for the prior year, 2019, let's say, because they had extensions for 2019. Let's say you just filed in 2019 relatively soon or recently, and you owed money. Well, that would be an indication that if things are somewhat the same this year, that you would owe money this year. Then you can go to the withholding estimator here and figure out what the withholdings basically should be. Now, note, obviously, we're getting towards the later portion of the year here. So that would mean that you would need to adjust your withholdings. If you're a W-2 employee, that would mean going to your employer and increasing the amount of withholdings, giving them a new W-4 form to increase the amount of withholdings for the last part of the year in order to cover the taxes that you think are going to be there. If you have a sole proprietorship, then you'd have to increase your estimated payments in order to cover the amount that would be owed by the end of the year. Also note that if that is the case, if you have to increase the amount of payments towards the end of the year in order to make sure that you make the payments for this year, then you want to do that again. You'll have to use the estimator tool again as of the beginning of next year, so that you can then lower the withholdings back down to what they need to be for an entire year's of withholding to be enough to cover the taxes. So that's going to be kind of a recap. Let's go back to the text here. Income taxes are pay as you go. There's a link to pay as you go. By law, taxpayers are required to pay most of their taxes as income is received. There are two ways to do this: through withholding from paychecks, pension payments, Social Security benefits, or certain other government payments, including unemployment compensation. So that's what most people end up doing. So most people are W-2 employees as they go through their working life, and the withholding is somewhat automatic, almost forced, right? So that means that's great because it's done automatically and you're able to comply with your requirement automatically. But then when things change in life, we may not have a complete grasp of what is happening with regards to the withholding. So if you start a new business or you have a side job or something like that, or things change in terms of family members, you get married, then you're going to have these substantial changes, and you're going to have to then think about, well, what's that going to do to my withholding? Because it's not going to be as straightforward at that point in time, and you'll basically need to make an estimate into the future, a projection, more complex projection than just filling out possibly a W-4 most of the time. And this tool actually is pretty good at being able to do that. Tax software would be better if you can do that, but this tool is getting better at taking multiple sources of income and basically doing a projection into the future so that you can be given a more accurate amount of withholding. It's also nice that if you wanted to use it for decision-making processes and try to think about, well, what would the tax consequences be if I did this or that, A or B, just like you would with a projection type of analysis. You may be able to use the tool for some type of decision-making process like that as well. So the other way is making quarterly estimated payments for income not subject to withholdings. So if you have your own business or something like that and you don't have W-2 wages, then you're required to actually write a check or do some type of electronic payment to the IRS, and you typically need to do that on a quarterly basis. So income tax withholding is generally based on the taxpayer's expected filing status and standard deduction. Adjusting withholdings on their paycheck or the amount of their estimated tax payments can help prevent penalties. This is especially important for people in the sharing economy, those with more than one job, and those who experienced major life changes in the last year. So notice this is one reason that the taxes has gotten somewhat more complex. It used to be that at one time, most households had one income, one earner in the family, and they basically had one job that was stable throughout most of their life, right? That's no longer the case. Many people will have multiple people within the family that are working within the family, and not only that, they're going to be jumping around from job to job a lot more than they would have in the past, and they may have different jobs working, multiple jobs at that time. That makes it a lot more difficult to just figure out what the amount of the withholdings at any one particular place should be. So you have to use some kind of estimator tool in order to properly have any idea, of what the holdings would be in a more complex type of household situation. The IRS also reminds people affected by COVID-19 to receive their withholding status, partially those receiving unemployment during this period. So you want to make sure that you take into consider the unemployment compensation, because that's a form of compensation as well, which will have an impact on the tax return. The Tax Withholding Estimator on IRS.gov is designed to help taxpayers determine how to have the right amount of tax withholding. It offers workers, retirees, and self-employed individuals a user-friendly, step-by-step method to help determine if they need to adjust their withholding by submitting a new Form W-4 to their employer or making additional estimated tax payments. So notice once you use this tool and you say, oh, if you find out you're like, oh, I'm short on payments, or even if you're too much over and you want to keep more of your money at this point in time because you don't need a huge refund, you're trying to overshoot a little bit, that would mean that you need to file a W-4 with the employer. Now note, when you file a W-4 with the employer, your tendency will be to go to the HR department at your business and ask them about the W-4 process and how to do it, and possibly get into tax advice. Note, they won't give you tax advice because they're scared of being sued, right? So they're not going to give you, typically the employer's not going to give you any advice on it. So what you're going to have to do is figure it out yourself, talk to your tax professional to figure out what the withholdings are if you can. If not, use the tax tool to do it, figure out the best you can, and then you go to the HR department to inform them of how much you would like to have withheld. And if you try to get any advice from them, it's usually an uncomfortable situation because they're going to try to avoid giving you advice, and they'll say, I can't do that. And why don't you just tell me a little bit? And it doesn't, because they can't do it. They're afraid to get. So you have to figure out the W-4 information yourself, and then go to the HR department in order to give them that information and help them process the withholdings that you're providing to them, is generally how that will work. So when to check withholding, taxpayers should check their withholding annually, and if life changes occur, such as marriage, birth, or adoption of a child, or changes in employment. Anyone who changes their withholding earlier this year received a large refund or tax bill after they filed their 2019 return should also check their withholdings. So notice many people probably just filed their 2019 return not too long ago because they were extending of the deadlines and whatnot. So that means that if you filed your 2019 return and you owed money, well, that's an indication that you're going to owe money this year, and you want to check that out. If you had a huge refund in 2019, well, that's an indication that you're withholding too much, and you can lower it. You can get more in your paycheck week to week, or bi-weekly, or however often you get paid. And that would be nice as well, because you'd like to get your money sooner, or most people would, right? As long as it doesn't mean that they're going to have a huge tax bill. What you're trying to avoid is penalties and interest that you're going to be owing on it. And if you had any changes since 2019 return, you're saying, well, the refund was perfect in 2019. Okay, that's great. But if you had any changes, such as, if you had changes in the amount of people the amount of dependents, a new child or something like that, or life change like a divorce or a marriage or something like that. That's going to have a substantial change as well. If you purchase a home, that's often going to have a substantial change. So those types of things are going to be items when you're going to want to say, all right, I got to double check my withholdings because I had this significant thing that has happened, at least significant from a tax standpoint and probably significant from a personal standpoint as well. But we're talking tax significance here because this is the IRS news. So back to the text. Quarterly estimated tax payments. People with a large amount of their income not subject to withholding may need to make quarterly estimated payments. Taxpayers who have received unemployment compensation at any time this year should check their withholding by using IRS Tax Withholding Estimator to learn if they should have taxes withheld or if they need to make estimated tax payments. So note that anytime if you do something outside of your W-2 income, or if you have a business, then you're going to have income that's not going to be subject to withholdings. And if you don't have withholdings on your unemployment compensation, that may be a form of compensation that could be taxable that you don't have withholdings on. So therefore, you might end up having to make actual payments to the IRS, which is painful because then you have to, actually physically write them a check or do the electronic payment instead of it having taken out of your account without you really knowing on like the W-2. So you want to check into that if that is applicable. So based on the tax withholding estimator results, taxpayers can choose to have federal income tax withheld from their unemployment checks or change the amount being withheld. To have taxes withheld from unemployment, they must complete the Form W-4V, Voluntary Withholding Request. So there's a link to that form here. Some financial transactions, especially when made late in the year, can have an unexpected effect on taxes. These include year-end and holiday bonuses, stock dividends, capital gain distributions from mutual funds and stocks, bonds, virtual currency, real estate, or other property sold at a profit. So if you have a big sale that you're going to have, on property that's going to result in a profit, possibly real estate, that could have a significant effect, of course, on the taxes. If you get the year-end holiday bonus, then obviously that's going to increase. That's going to be taxable income that just came at the end of the year. That could have a tax effect. So you want to take those into consideration when doing your estimations. Taxpayers have two free electronic options for scheduling their estimated federal tax payments with IRS Direct Pay. There's a link to that here. People can schedule payments up to 30 days in advance. Using the electronic federal tax payment system, there's a link to that here. They can schedule payments up to 365 days in advance. There's a link to those items here. There'll be a link to this in the description.